So on this webinar, what we're going to discuss is we're going to discuss about tax savings with electric cars when you buy from your own company. A bit about myself and my company. So I'm Vijay. I've co-founded WIS with my two other good friends, Iftika and Sunat. Obviously, we've been running this business for the last 14 years. It'll be 15 years next time. So it's a long time, but thanks to our clients, we are growing. That's a bit about me. Okay. So before kicking things off, we need to understand the definition of an electric car. Okay. Uh, uh, as per HMRC, there are three kinds of electric cars, right? One is pure electric cars. So pure electric cars are where you plug in, plug into a charger and charges. There's no petrol, no diesel. And other two kinds are hybrid cars. So they have a combination of, fuel and electricity. So the hybrid cars have two versions. One, plug-in hybrids, where you plug the car, charge, but it will give you certain miles and extra miles. Obviously, you get it from either diesel or petrol. And conventional hybrids, where you can't recharge by plugging in, but the car itself generates energy through battery, built-in battery. But for this presentation, we will only discuss about pure electric cars, the cars where you can plug in and charge, because it'll be long webinar if I keep talking about other two. So we'll park that for another day. Okay, what are the advantages of an electric car? Obviously, zero emissions. So, as you know, electric cars are powered by a battery. So, it will not produce exhaustic emissions, hence, kinder to the environment. No need for fuel. With every time there's a world issue like Ukraine or Israel Palestine, the fuel prices go up, right, in considerable proportions. So because you don't need a fuel for the car, it tend to be cheaper when you drive the EV. And the maintenance savings. Unlike other cars, electric cars don't have oil changes. The engines are not that as complicated the traditional car. So argument is they're more affordable to maintain. Tax advantage. Obviously, there's lots more tax advantage having an electric car by a company, which we will discuss. That's the purpose of this webinar, but we'll go in detail with that. And government grants. Obviously, government want people to use more electric cars, so there's lots of government grants available for people who thinking of buying electric vehicles. And we'll briefly discuss this point too. And like any other advantage, what are the disadvantages of having an electric car? Obviously, very expensive than diesel car. Charging points not widely available. I did a trip to Isle of Skye, top of Scotland last year with my electric car. Wasn't very pleasant because you have to drive miles and miles looking for a charging point. Charging time. So when you unlike pumping petrol or diesel, obviously charging times are not as fast as that. So you'll have to kind of provide some timing for charging. Technology. And lastly, because it's a relatively new technology, and whereas traditional cars been there for decades, it's not tried and tested, right? So if something breaks, the repairs, all that might be a bit expensive because not many people are trained to do the repairs. Plus, it's a new system. Okay, before jumping into the tax, we'll talk about the government grants. Again, this list is ever changing, right? So there is a autumn statement on 22nd of November, and this might change again. So don't quote me on this. Is ever changing. So I can't quote any of this, but keep looking for these ones, right? The plug-in grants are like there are certain cars, if they qualify for government grant, they get 2,500 off on their list price. So the car dealer will automatically apply this discount when you purchase the car. Charge point grants, again, if you install electric vehicle charging point at your home or at your office, there are certain grants available for that. Road tax savings, as you know, there's no road tax on electric vehicles at the moment. No fuel duty, because every time budget is announced, there's increase in fuel duty. So fuel duty is basically not applicable for EV, right? Because you're not pumping petrol or diesel. The other part of that is, as you know, currently petrol and diesel have VAT of 20%. But when you charge electricity, the VAT on electricity is only 5%. So there's a saving there too. And lot of talk and news about ULEZ congestion charges. So if you have electric vehicles, they're exempt. Or I think for congestion charge they're not exempt, but you get a reduced kind of fee if you pay annual fee. So it does gives you more freedom, and just like London, more and more towns are introducing these charges for diesel and petrol cars, right? So so having an electric car, you're kind of getting away with that. And in Scotland, there is a interest-free electric vehicle loan up to 28,000. Only if you live in Scotland. That's not applicable if you live in England. Okay. Before jumping into buying the car, I think one needs to understand, what questions then they need to ask themselves or their company before purchasing the car, right? One, do your company have enough cash reserves to buy a car? Do you have enough profits to pay for the company car expenses? Do you want to drive a brand new car, or do you prefer a used car? Some people have a theory: when you buy the brand new car, by the time you get a number plate, you have a massive depreciation, right? So you need to ask yourself whether you prefer driving a brand new car or having a used car. And do you and your business have a good credit history, especially if you're going on the leasing option? So you need to understand whether your company is a new company or has some credit history, any bad credit over the years, etc. Right? And finally, what's your budget? Do you have a budget that you can afford to have a car? And do you have charging facilities? As I said earlier, there are certain parts in UK you might not have good charging facilities, right? That's something you need to check. And what impact will have it on your personal income taxes? So that's another important thing you need to understand, because when you have a company car through the business, through a business, there will be a certain benefit in kind. So if you claim child benefit, or if you have tax-free childcare, those eligibilities are based on a certain amount of income, right? So when you get the company car, your income threshold will change. So you have to consider those points. And two other main consequences are what are impact on your company taxes / capital allowances, which will cover, and impact on your personal taxes. So if you decide to go ahead and purchase a business car, what are the options that you have to buy the car, right? One, you can purchase outright from the company funds, right? If you have sufficient cash flow in the company, sufficient cash reserves in the company, you can buy it outright. Or you can take a loan from, say, your bank or somebody else and buy the car outright. Or you can lease the car. So there are two main leasing categories here. One is a hire purchase, or HP, everybody calls it. Business contract purchase, or BCP, okay, and business contract hire. And there are other options too, right? When you read business contract purchase, BCP, and business contract hire, almost sounds very same. A lot of the car dealers do get this confused, right? So I wouldn't be surprised if clients get confused. So it's very important to distinguish the difference between business contract purchase and business contract hire, because the terms are very confusing, but the tax treatments are very, very different. Okay, if you decide to go and purchase a car outright, so purchase outright means you're buying the car as a one-time payment, you pay in full, and the car thereafter is owned by your company. So VAT implications, a lot of the questions that we get from our client is, can you claim the VAT when you buy a brand new car? Unfortunately, the answer is no, if you have a certain element of personal use, right? This is different. If you have a taxi company, if you're buying an electric car purely for your taxi services, obviously you can claim VAT because that's your business. But if you are a direct running consultancy company and buying a car as director to for your personal use and for your business use, unfortunately you cannot claim VAT, right? Saying that, you can claim VAT on maintenance. So if you want to take the car for service, or you want to take the car for, there's some repairs, etc. If there's VAT, you can claim that VAT. One main thing to understand here is to claim any VAT, your company has to be on the standard VAT scheme. So if you're on flat rate VAT scheme, you can't claim any of this. So you have to convert your VAT registration to a standard VAT if you want to make any claims. Expenses. So what expenses, you can claim once you buy the car, right? The capital allowances. Capital allowance is simply, I'll come to the slide a little later. Basically, what we are saying is, if you buy a car outright, and if that car is a brand new car, you can deduct 100% value of the car on the year one. So if you buy a brand new Tesla for £50,000, and if your company has a profit of 100,000, rather than paying corporation tax on 100,000, you'll effectively pay corporation tax on 50,000, right? But if you buy a used electric car, the capital allowance is only 18%. So the value of the car, you multiply by 18%, that's the reduction you get. Obviously, you depreciate the on a basis. So the typical standard method is 25% reducing balance, but you can have a accounting policy and decide what's best for your company, right? Maintenance cost. I said maintenance expense are considered business expense. So as I said, you also can claim VAT. Also, you can claim the total expense against your corporation tax. Mileage claim. So even though car is owned by the company, if you do business mileage, so when I say business mileage, going from your house to your client side, that's not considered as a business mile. But if you come to see an accountant, or if you go to see potential new clients, you can claim 10 pence per mile, right? So that's from September 23. I think it's for 9 pence before that. If you claim mileage, obviously you can't claim the electric charging expense, because you can't distinguish by how much is the personal use, how much is the charge use, etc., because you're already claiming 10 pence, right? Finally, the impact on the employer and national insurance. So if you're don't know what happened there. Yeah, if your company is providing you with a car, company has to pay 14.53 class 1A national insurance on the BIK value of the car. So when I say BIK value of the car, it's not the list price, it's the car value multiplied by the BIK percentage of the car. So at the moment for electric cars is 2%. And company taking car loan to buy the car. So you decide you don't have sufficient cash reserve in the company, so you decide to go to the bank or another lender and take a loan and use that loan to buy outright purchase, right? So it's the same impact as buying outright. So only thing is, when you take a loan, obviously you're going to have interest to pay for that loan. So that interest you can expense from the company accounts. So I kind of did a small slide to differentiate the hire purchase HP versus business contract purchase, because both of them are lease options, right? So we'll just quickly go through the slight differences in both. So if you buy a car through hire purchase, or if you get the car, if you get the car through hire purchase, you or BCP, you don't own the car. The whoever leasing company owns the car, right? Because effectively they win the car, but they own the car until you pay. They have the right for it. You have an option to pay from upfront deposits. Both of them would require you to pay some deposit at the beginning, and there is fixed monthly payments. You know how much exactly you pay from your account or company account on a monthly basis. And if you are failing your payments, the leasing company will take the car back. Obviously, car has to be bought from very reputable dealerships, because not everybody can give leasing agreements. Whether you can have option to regular monthly payments for a larger final payment. So on hire purchase, no, there's no such thing as large final payment, right? Only BCP has the final payment or balloon payment. On hire purchase, you're guaranteed to own the car at the deal, right? Because you effectively, it's like a loan. The companies, the dealership is giving, right? They're giving you a car, they're giving you a loan, they're deducting the loan on a monthly basis. So after you repay the full loan, you own the car. On BCP, there is, you don't have the right to buy the car, right to own the car at the end, because you are effectively paying the car on a monthly basis, and you have to pay the balloon payment to own the car. But after paying the balloon payment, you will have an option to buy the car. So you can always ring up and say, even though it's not in the contract, you can always go, ring up and say whether whether you can buy the car outright. Option to return the car at the end of the deal. If you hire purchase, as I said, effectively, car is given to you, so you don't have option to return. Whereas on BCP, you do have option to return. And on hire purchase, there's no mileage restriction. It's just like a car loan, right? The leasing company has given you the car, and they're just expecting you to pay the loan repayments. Whereas in BCP, because there's no you haven't made the balloon payment, so they're not sure they're going to keep the car or return the car. There's a kind of a mileage restriction on an annual basis. On both options, effectively it's car loan, right? The dealer is giving a loan. Only main difference is you're not owning the car on the day one, but on the tax impacts for both options are very same of purchasing the outright, right? Main thing to ask here is when you speak to the car dealers, how to understand if something is BCP or something is HP or something is business contract hire, is to ask the question whether monthly payments have VAT on them. If monthly payments have VAT on them, right, that's not a BCP or that's not a HP, that's effectively a BCH or business contract hire. And main thing to consider, either getting a bank loan or getting a hire purchase or business contract purchase, is interest rate, because how they make money is through interest rate, right? If, for example, if you get a bank loan to buy the car, it's not secured by anything, so tend to be higher. But I don't know. But if you get the leasing from the dealer itself, it tend to be lower because they do have a charge on the car itself, so they do have some kind of guarantee or security. Finally, business contract hire. So business contract hire is a very popular way for business use vehicles without having to purchase them outright. Essentially, it's a long-term rental agreement. Rental agreement, like where when you go holidays, you hire a car for a month or 2 months or whatever. It's very similar to that, right? So basically, you hire a car for longer term. You agree on a price, or there's upfront fee, deposit or the fee for that. You pay, and after 3 years, 4 years, you return the car, and obviously there's mileage restrictions on it. VAT implications on when you hire a car, the business, pays VAT on the monthly payments, right? So when you pay the monthly payment, there are VAT on it, and because there is a personal use element, you can claim 50% of the VAT that you pay on a monthly basis. In previously when we spoke about buying outright or leasing, we said you can't claim in VAT, but on this option, you VAT on the monthly payments. And again, if you have maintenance expenses, you can claim 100% of those. Again, both you need to be on standard VAT rather than the flat rate VAT. Expenses, so monthly rentals will go as a business expense. Maintenance expense are, again, it's a business expense. Mileage, if you do a business mileage using electric car, you can claim 10 pence from the company. And employer national insurance, again, 14.53 on the BIK value of the car, and not the list price. And pros, it's good because monthly payments, how much they're going to be, so it's easier to budget. No residual value of risk, because one thing that when you buy a brand new car, you don't know what the value is going to be after a few years. But this one, you don't have to worry, because if you don't like it after 3 years, you just return the car. And vehicle ownership, remains in the leasing company, so you don't have to show anything on the balance sheet. Cons: businesses do not own the vehicle, so some people like to own the vehicle. So when you do this, effectively you don't have anything on the balance sheet. Mileage restrictions: you can't drive more than certain miles, and if you do drive, there's a penalty made, very expensive charges goes into when you return the car. And early terminations: if you get a car for 3 years, if you don't like it, on the first year, unfortunately, if you want to come out of it, there's a significant termination fees. Okay, capital allowance, right? So it's a very accountant term. So apologies for bombarding with this. But what we are trying to explain here is, when you buy an asset, it's not an expense. That's a key thing to understand, right? So if you buy a car, it's not an expense. It's like basically, rather than having 50,000 in the business bank account, you're having 50,000 worth of asset as a car, right? So the actual expense on the car is the depreciation of the expense, right? Depreciation of the car. So again, that is not deductible corporation tax. So when you buy asset, not deductible corporation tax. When you depreciate the car, again, not deductible corporation tax. So what is the solution? The capital allowance. So what HMRC is saying is, because you're not allowed to use depreciation as a method to reduce corporation tax, they give something called a capital allowance. So capital allowance is obviously encouraging, not cars. Some manufacturing companies might buy plants, equipment, etc. So government is encouraging people to invest in these assets, right? So when you buy such assets, you get three kind of allowance. One is called annual investment allowance. Second is writing down allowance, and third one is a first year allowance, right? First year allowance is where if you buy the car today, you get the allowance on the day one. So money today is better than money tomorrow, especially with the inflation rate going up 10%, right? So present value of the money is much more important than what's going to be on the future value. So when you buy an electric car as a brand new, you can claim 100% cost of the capital or cost from the government. So if your company has made a profit of 100,000, if you spend 50,000 on a car, you put 50,000 as an expense on the very first year, and you claim, effectively reduce your corporation tax. But if you buy a second-hand electric car, that's not 100%. That's only 18% of the value of the car, right? So not significant impact if you buy a second-hand car. Okay, and so that's the company tax implications. Also, the last part is the national insurance I already covered, right? And the personal tax implications. So when you buy electric car through the company, there are two things. One, obviously, the company tax implication, which we discussed, and the latter part is the personal tax implications. So if company is giving you a business car, there is benefit in kind. It's called benefit in kind, similar to business providing medical insurance or any other benefits, right? So benefit in kind is considered as an additional income in calculating personal tax. So assume you take a salary of 12,570, you take a dividends of 28,000, and you have a company medical insurance for 1,200. Your total income is 41,770, right? So everybody understands that. And BIK value of the car is calculated as follows. So you have the list price. So and accessories. Somebody wants to flash it out. You might want to get automatic driving or autopilot on Tesla, or you want to have nice alloy wheels, all that accessories. So you include both of that. Obviously, if you don't claim the VAT, you include the VAT also. So you total price of the car, you multiply by the BIK percentage of the car. So BIK percentage of the car for electric car at the moment is 2%, and 2% for next year, tend to go up 5% in 27, 28. But compared to, if you have a 3 liter, 4 liters, where the BIK percentage is maximum 37%, compared to that, I think this is a very low rate, right? So using the example about now your personal income will be 41,770, which we discussed earlier, plus 1,140 from having a car. So your personal income will be 42,940. But the good thing is there's no national insurance on BIK, right? So that's a good thing. But if you're claiming child benefit, or if you want to keep the income on a certain level, you have to make sure that you sacrifice some of the dividends or reduce some of the salary to compensate for the impact on the BIK on the car. Okay, that's it. I know I've rushed it through. Apologies. I do speak a little fast. I'll stop sharing the screen and we'll open for any questions. Anyone has any questions? You can either ask in the chat or Suresh. Yeah, Suresh, on the salary sacrifice, Suresh. So if you are a business owner, there's no such thing as salary sacrifice, right? Because it's your own business. But if you work for somebody else, again, salary sacrifice. Basically, what happens is it comes off your salary. So if you decide to take a car, and you want to pay for the car, so it comes before your gross salary. So if your gross salary is £1,000, if you want to pay £300 for the car hire or BCP or business contract hire, what tax is £700? But the £300, you don't get taxed, but you get added a BIK, business in benefit in kind. It's as simple.
I mean, like another thing I want to ask you, like when they're comparing with the pensions and all, because it is taken before the tax.
Okay. So this, really good question, right? So there's something called adjusted income for for tax, right? That adjusted income is for tax purposes. If you do electric car, no tax, because obviously it comes off your gross salary, so before it gets into the calculation. But you do pay employer's NI, and you do pay benefit in kind, right, on the list price or the PIK value of the car, right? But for the calculation of, for example, child benefit or tax-free childcare, that doesn't work, because it's not like pension. So pension is the only deduction you can consider for adjusted income for child benefit. So I don't know whether that answers, Suresh, but that's how it works.
I mean, like in simple terms, if you say that HPB, and if you compare all four of them, like BCH and HP and other thing with salary sacrifice, what do you recommend for your clients if they are employee?
If they are employees, you mean when you say employee, they're on a permanent job with somebody else, that they don't have their own business?
Yeah. If they are an employee.
That's a separate conversation, right? So what we discussed today is about business providing a car for their business owners or the directors or employees, right? So if you are buying as an employee, and if you're on salary sacrifice, that totally depends on the APR, right? Because how much interest rate, second is the depreciation of the car. Nobody has a crystal ball, but you need to understand if you get a car today brand new, what will be the value in 3 years down the line, right? So I have clients who bought cars who made profits because their value of the cars has gone up. There are clients who have significantly lost value also. So for this conversation, we are more talking about the business giving this thing. But there's no significant difference. It's again a personal choice, Suresh, whether you want to own the car, you want to return the car every 3 years. So there's no different, you can't do, there's no like-to-like comparison, right? Because all three are different kind of options.
Okay, yeah, thank you.
Thank you. Any other questions from anyone? We will try to share this. Hi, Sunil. Hi. How are you?
Hi. Yeah, not too bad. Thank you. Just a quick question. So the benefit in kind. So how many years do you have to, does that work basically? How many years do you have to pay? As long as you own the car?
As long as you own the car, Sunil, yes.
Okay. And is there any impact on the company? Let's say if I buy this year and then down the line in a couple of years, if I close the company, do I have to pay back any tax I have?
Very good question. So it all depends on what type of capital allowance you claim, right? So if you claim 100% allowance, right?
Mm-hmm.
Then when you close the company down the line, you need to revalue the car. So if you tell you had to buy that car from the company to yourself, and then you work out, okay, how much car is depreciated, what's the value of the car that's selling it to you, how much capital allowance you claimed, how much you have to repay, etc. Because when the capital allowance is given, assumption is using for the full useful life of the car, right? That's why they're giving 100% allowance. If you after a few years, if you close the company, understanding is that you had to buy that car or transfer that car to yourself, and you'll have to either pay for it or offset against whatever the gains in the company.
Yeah. Okay. Thank you.
Okay. Any other questions from anyone? Cool. I think that's it. So we will share this slide with everyone who participated. There will be a recording available for this presentation too, which we will share with others who couldn't attend today. But if you have any questions, do come to us, right? Madani, you think you say question? Hi.
Hi, Vijay. Yeah, just is there a possibility if you take it on the company's name, and if wife and husband both are directors, how is the NI going to be like? Both has to pay?
Yeah, so there's no NI on personal name, right? That's why I said, when you have a company car, there's no employees NI. It's only employers NI. So that's NI that company pays. So when company pays NI, they don't pay on the employee's name, right? They just paid on the company name, so it doesn't really matter. But on the benefit in kind question, one of you have to choose, which one is going to be, because you have to tell, only one registered keeper, right? So one of you have to make a decision which one's going to be the registered keeper.
You can't share between them.
No, because no. So it's all B5s, and if companies are shared, when you get parking tickets, when you get penalty notices, etc. DVLA is not equipped to do that, right? So DVLA rule is that only one registered keeper, right?
Okay, thank you.
Yeah.
And the employer's NI, sorry, Vijay, employer's NI you only pay for the first year, right?
No, again, employer's NI until you have the car, Sunil.
Oh, is it? Okay.
Yeah. Until you have the car, but it's very 14.53 on the list price of the PIK value of the car, right? For the example that we spoke, on a 50,000 Tesla, it's going to be like, what, 140 pounds, 150 pounds, right? It's a very minimal amount.
Yeah. Okay. Yeah, it's not on the list price. Yeah.
Okay. Yeah, it's on the BIK value of the car.
Thank you.
Okay. I Bhavanam, you can ask questions. I think you're on mute. We can't hear you. Hello. Okay. Any other questions?
Yeah. Are you able to hear me?
We can hear you now. Yeah, please go ahead.
Is it possible to buy under a limited company with SPV? Where no employees or anything as such?
Ideally, you need to have an employee to get a car, give a car, right? Because its company can't drive the car by itself, so company has to give the.
I mean, directors are there, right? But director itself, they can't buy.
Yeah, because the thing is, BIK, when you submit the BIK, you have to have a PAY registration done, because you can't submit without a payroll registration. So you can have directors can have a car, but they need to be a registered PAYE scheme to give.
Okay, thank you.
Yeah. Okay. Any other questions from anyone? Okay, I think we can conclude. Thank you, everyone, for joining today. We will do a few more webinars about a few more of the subjects in coming months, coming days. So do watch out. And thanks again for joining today. Thank you. Bye.
Thank you. Nice one.
Thank you.
Bye. Bye.
Bye.
Bye.